think we might be live. And if we are, you're in the right place. We're going to talk about taxes for new workers in a minute or so. We're going to make sure. If you've just signed on, we can go for another minute or so and see if we get a couple more participants to sign on. You're in the right place. This is the LITC Facebook Live. We're going to talk about taxes for new workers. Give us another few seconds. Earnings 101. Hello, and welcome to the Low Income Taxpayer Clinic's Facebook Live, brought to you by Legal Aid of Arkansas. My name is Jennifer Gardiner, and I am the director of the tax clinic at Legal Aid. We represent low-income taxpayers in their controversies with the IRS. We also educate taxpayers in their tax rights and responsibilities. If you have a question at any time during this brief presentation, please submit it right away and we'll get our panel to answer it live. If you're watching this on video, you can also submit questions. We will receive them through Facebook and answer them as promptly as we can, usually the same day. Today, I have Thomas Houdek with me. He is a director of the LITC at Western Missouri Legal Aid, and he's going to tell you something more about himself a little later. So here's our news flash for the moment, and we will continue flashing this throughout the fall. The 2021 tax year deadline for claiming a refund is right around the corner. So you should have filed your 2021 income tax return, back in 2022. But if you're entitled to a refund, you have a 3-year window to do that. And that window is going to expire in early 2025. 2021 was a banner year because it had an economic impact payment, and it also had much bigger child tax credit payments. We don't want you to miss the deadline. If you have failed to file your tax return, you can contact us at any time as soon as possible, and we will get your tax return done for you. Call us. Our contact information is going to be at the end of this presentation. So today we're going to talk essentially about an introduction to how do you get paid. And the IRS is calling this the First Job Outreach Initiative. So what they're trying to do is focus on how people get paid and understanding withholding or the lack of withholding if you're not a wage worker. And they're doing outreach on this topic during this month or so to help first-time workers understand their paychecks. If you're on here and you're not a first-time worker, it is definitely worth a refresher, because every time you change jobs, your tax situation is going to change and you go, oh gosh, what So it should be maybe the IRS's first day at the job, at every job outreach initiative. So today, Tom, my colleague here, is going to start talking about Form W-4.
Thanks, Jennifer. So my name's Tom Houdek, and I'm the director of the Low Income Taxpayer Clinic for Legal Aid of Western Missouri. We're based out of the Kansas City area, and we serve about 40 counties within the state of Missouri, and we also do some work on the Kansas side as well for tax clinic issues. I received a Master of Laws in Taxation from University of Kansas City in 2008. I have been a former tax preparer and also worked with H&R Block answering tax questions posed by the preparers out in the field. I worked for the Missouri Department of Revenue for 13 years, primarily in sales and use tax, but also in some income tax issues. And then I also spent some time working as an associate chief counsel for the Internal Revenue Service out in San Francisco. So you go and you get a job, and the first thing that you're going to do when you get a job is fill out a W-4. Now, the W-4 tells the IRS how much withholding to take out of your paycheck every month or every pay period that gets paid, that pays your income taxes. So, you have to fill one out for the federal, and if you have a state that does that has income tax, you'll have to fill one out for the state too. And basically, it gives your employer information so that they can withhold taxes out of your paycheck, because when you earn income, you pay tax. So this way, your tax is paid. You don't necessarily have to worry about it until the end of the year, but it's paid and it's covered. And so this is what the federal law requires. So you want to go to the next slide? So the big question when everybody gets their, you get your first paycheck, you open it up, you think you know how much you're going to get, you look at it and you're like, where'd my money go? The sitcoms, they always have a thing where the person gets their paycheck, they open it up and they're like, wait a minute, who's FICA and why did they take all my money? Well, FICA is the Federal Insurance Contributions Act, which requires you to pay, you'll pay your income tax, and then you pay your Social Security and your Medicare tax at the same time. And those are two U.S. payroll taxes. So the Social Security covers your part of the Social Security you're going to hopefully be able to use in the future. And Medicare, which is the federal medical insurance plan that you get to take advantage of when you're 65, you go ahead and you pay that now. And so that builds up over time, and then you're able to use it when it comes time to take advantage of those two things.
Are these optional taxes?
No, these are not optional taxes. These are taxes you're required to pay. You pay the bulk of it, but your employer contributes some to that as well. So, as you pay 6.2% of Social Security tax, 1.45% of Medicare tax, and then your employer adds a little bit out of their own pocket from that, which is the employer contributions that goes into that as well. But no, you are required to pay those taxes if you work a job. So can we go to the so now the W-4 these days is more based on your filing status as opposed to the way it used to be done. You used to be able to get what are called exemptions, and so you got an exemption for yourself, and if you were married, you probably got an exemption for your spouse, and then you got to take an exemption for the number of dependents that you have living in your household, and then you added all those up, and the number of expenses told your employer's HR department how much withholding to take out of your paycheck. Now, it used to be that the more exemptions you have, the less they took out, so that you had more take-home pay. The less number of exemptions you had, the more they took out, and so you had less take-home pay. So it makes, it would work itself out at the end of the year when you filed your taxes. But nowadays, you fill it out first based on your filing status: single, married, filing jointly, married, filing separately, head of household, those kind of things, and they take that into consideration then. However, you can also tell them if you want an additional exemption for the number of dependents that you have in your home. So you can determine the number of qualifying children you have under 17. Add the.
Tom, I have a question.
Yeah.
So you said fill it out. How do I fill it out? I heard from one employee that at Walmart, you have to go to their website and you just answer some questions. Personally, when I've come to a new job, it's a paper form from the IRS. Is that what you're talking about when you're saying fill out the paper form?
Well, it's, when I start a job and I go to my HR department, they put the form in front of me and they have me fill it out. Or there could be some like Walmart, for example. Walmart gives you, asks you answer some questions about your home. Are you married? Are you single? Do you have kids? That kind of information. You put that into their system, and eventually, when you start the job, they should provide you with which is most likely a completed W-4 that you would then sign, because you're going to have to sign and date it when you get it. They just can't take that information. You're going to have to sign it to basically acknowledge that the information you put on is correct and that this is the information that you want them to use to do your withholding. Now, the other thing too is I would think now, based on the questions we have in the
Chat.
in the chat, yeah. It says, what does it mean to claim allowances on a W-4? Allowances are most likely going to be I would think they'd be the dependents that you'd want to do, and you'd want to just, make sure you listed, you determined how many actual dependents you had in your home if you wanted to do that. So if you have children under the age of 17, if you have an individual in your house who's disabled, who can't work, and you're taking care of them, that could be an allowance as well. But you would just have to determine that on your own in order to write that down. I mean, the other thing too is you don't have to claim allowances. You can claim as many, or as many as you can, or claim none. Because remember, the less that you claim, the less that gets taken out of your paycheck, the more it gets paid, so that you can make sure that you pay the tax. Or if you need the money, you claim as many allowances as you can, so that you get the most out of your paycheck. But what could happen is you could end up owing at the end of the year because you haven't paid enough out of your wages to cover the tax that's actually owed. But you won't know that until you actually file your paycheck.
Okay, so then in April, I go, and I owe money, or, oh my gosh, I was overpaid. Can I go back to the same employer and change it?
Yes. Yes, you can go back to the employer and you can change it. If you want to change it to where they take out more, so you get a bigger refund at the end of the year, you can do that. If you haven't paid enough in and you want to change it so that so that you don't owe a lot of tax at the end of the year, you can do that too. Or, there are some people that like to take it and get it as close to zero as they possibly can. So therefore, they're not paying enough, they're paying just enough to cover their balance, but they're also getting enough back to where they're not getting this huge refund at the end, because people think it could be like an interest-free loan that you're giving to you're giving to the federal government. So yes, you can change that throughout the year if you need to.
Okay.
Now, so then when you get your paycheck, part of the paycheck will be connected to it a pay stub. Or if you get an electronic, if you get your pay paid to you directly deposited into your bank account, your employer should provide you with a statement that says how much was withheld from your paycheck and what was withheld. So it could show you the income tax you paid. It can show you the FICA, the Social Security and Medicare tax that you paid. If you have like deferred compensation to like a 401k or an IRA that's managed by your employer, it'll show you how much of that was withheld out of your paycheck. It'll show you the amount that was withheld out of that specific paycheck, and then it should also have a year-to-date section where it tells you about how much has been withheld throughout the entire year. So obviously, as you go through the year, that number is going to increase over the year for all the income tax, FICA, and other things that are withheld from your paycheck are recorded.
So one thing we have, and I'm sure you had this at your clinic, is clients who didn't get a pay stub or didn't get a W-2. And that's something you really want to sort through and make sure that you're getting a pay stub so that there's a check, and it's accurate. If you're not getting a pay stub, probably they're not being shady. Maybe they just haven't told you how to get it. You know, you want to check your pay stub. So if your employer is actually you, because well, maybe you think you're working for Uber, but that's really you're working for yourself. Or you're working for an organization that only hires independent contractors, then you're going to get a 1099 and you won't get that W-2 that Tom just mentioned at the end of the year. When you start a job, so we're talking about first job or first day at the job, you want to make sure you understand with that employer or who's paying you how the arrangement's going to work. If you're not given a W-4, that should be heads up that they're not going to do any withholding. And then you're going to get every penny yourself with no taxes of any sort taken out. So then they're going to pay you. They might or may not have a pay stub every pay period on that. The rideshare, they usually put it online and they show the breakdown because they have fees, but those are not taxes. But if you're just a babysitter and she just writes you a check, there's not going to be a pay stub. So you got to keep copies of those checks, keep track of how much you're being paid. But when you're in that situation, when you're that worker, when you're that independent contractor, then you have to pay all the taxes yourself. And you can either do this during the year in installments, which is the best way, and the IRS expects you to do it, or you can pay it at year end. The problem is if you pay it at year end, there could be a penalty for underpaying during the year. This can come as a shock sometimes when people go to a Vita site or paid preparer to do their tax return and they find out they owe and they don't have the $1,000 in their bank account. So this is the heads up right now that you're responsible for paying your tax when you get the whole thing because no one withheld anything. There's so many examples, but these are just a few of the type of people who are working as independent contractors.
So Jennifer, just to interject here real quick.
Yeah.
So could a person who like paint houses or are they self-employed or what
Yep.
do they fall under that
House
as well?
cleaners would be self-employed. Now, maybe you work for a big organization. There are cleaning services that do have workers that are paid on W-2s, but those are the big corporate entities. If you've got just a group of 3 ladies and somebody's collecting the money, you're on your own for paying your own taxes because there's nobody submitting any taxes on your behalf. Originally, as in until a couple years ago, there was only a 1099 miscellaneous, MISC, that is a form that you submit to the IRS when you're the paying person, that says this person worked for me and I gave them $1,000. Now, recently, the IRS has divided up and there's still 1099 MISCs, but we're going to talk about 2 new forms, the 1099K and the 1099 NEC.
Hey, Jennifer.
Oh, yeah.
Hey, quick question for you.
Sure.
For the people who are self-employed and are paying their own employment taxes, how are they supposed to figure out what their installments are?
I know that can be hard. If you have that moment when you file the tax return and you discover how much you owed, then, oh my gosh, that's how much I had to pay for last year. Let's say it's $1,000. Well, that's how much you should have been sending in. So you could use that as a guideline, but there's also the preparer and the software that you can use yourself can prepare the estimates for how much you have to pay during the upcoming year. So you don't have to figure it out yourself. Sometimes I tell people 10% is not going to do it. Could you try for 15%? And that's just the back of the envelope guideline. If you can send in or set aside 15%, you're probably in good standing, and that's going to be enough. And that's going to come out to a lot of money. So there are two methods. There's the estimated by using a computer, or just use a percentage to try to do it roughly yourself.
So Jennifer,
Okay.
real quick, there was somebody online had asked, put in the chat, does the employer tell the IRS how much it paid me? Yes, they do. That's what the W-4 does, is it requires the employer to provide that information to the IRS, and then the IRS keeps that information and uses it to compare to the information that will be included on your return when you file your return. And if you're self-employed, you're working for Uber or DoorDash or one of those companies. Those companies also report to the IRS how much that they have paid you as well. So all that information is kept with the IRS so that they can compare it when they get your tax return to see if you've included all of your income on the return when you file.
And so what we have on the screen now is understanding your 1099-K. That's issued at the end of the year, just like a W-2. And when I say issued, the employer or the credit card company or whoever sent you the money for what you did is going to send the 1099-K to you, and going to send the 1099-K to the IRS. So you can't fly under the radar. They're telling the IRS. And this can be confusing because there were some, situations out there where maybe you weren't working for this place. Maybe you were just sharing expenses with people. So you want to pay close attention to these forms and make sure that what's on the form is adequately communicated with the IRS. And that's your tax returns. You're going to discuss this with your preparer at the time when you bring all of your forms to the preparer. So the other one that's a little bit easier is the NEC, which stands for non-employee compensation. And, let's say you're a painter. It could be the house cleaner. It could be the lawn care. They just aren't treating you as a wage employee. And the same thing is that money that's reported to the IRS that they paid you has to appear on your tax return. Now, next, we're going to talk about how do you keep track of all of this before you go to the tax return preparer.
So if you're a self-employed individual, the IRS, the federal government doesn't want to tax your total income; it wants to tax your profit. So the way you do that is you take your total gross income for the year, and you're able to subtract out expenses that you incurred to run your business. So to claim an expense, the expense must be ordinary and necessary to conduct the business and incurred during that tax year. But you have to keep receipts. You have to keep records, because eventually, if you file your return, the IRS reviews the return. If they have any questions about that return, they're going to contact you. And at that point, it's your burden to prove that you can claim that expense. It's your burden, not the IRS's. It's your burden to prove that you can claim that expense. So how do you do that? You keep receipts. You keep records. You keep invoices and payment receipts, contracts that you have with clients, records of expenses and deductions, copies of all your 1099 NECs that you receive. You keep copies of your bank statements and other financial records. And what I counsel my clients to do is, you can go to one of the office supply stores, and they have an expandable folder that's separated by month. And, each section will have the month at the top. And what you do is you get a receipt that you want to claim as an expense towards your business or towards your income. and you go ahead and you put that receipt in that month. And, you don't have to keep tons of records, but if you have all those receipts separated by each month, then you have it ready to go to your tax preparer at the end of the year when you're going to have your taxes done. Now, mileage, travel, and meals are something even you have to keep even more information on. If your mileage, if you're driving for your job, through the delivery services, or you're a salesman going out and running, running to call on clients, you need to have a mileage log. And the mileage log keeps information on the date that you traveled, your odometer reading beforehand, your odometer reading when you get there, who you're going to go see, and why you're going to go see that person. Because mileage, travel, and meals have a stricter level of scrutiny than just your regular receipts. And these tend to be the three that, if people are going to abuse stuff on with their self-employment income, these are the three. So you need to keep a logbook or a mileage logbook, and you have to keep this information updated constantly, because eventually you may get audited and you may have to prove this. And if you can't prove it, the IRS is going to disallow that particular expense.
So we had a question that said, how do I do this efficiently? And my answer to that is that you keep up with it. It is very hard to do after the fact, especially if you waited until after the IRS contacted you. And that's a really unfortunate learning experience. And who's going to help you prepare your tax returns?
Well, I think, VITA, the Volunteer Income Tax Assistance organization, they give free tax prep to people who earn $67,000 or less of income. They're trained they have to take a test that the IRS has created. They have to get an identification number to tell the IRS that they're capable of preparing the taxes. They do it for free, and you make an appointment with them, and then you go see them, and you don't have to worry about finding somebody else, because they can do the work.
And there's also another set of organizations that are called tax counseling for the elderly, that are also, some of them are run by AARP. These places don't even have an income limit if you're over a certain
60.
age, and I think it's 60. But they tend to work, in tandem with VITA. They have similar testing. And what we do at Legal Aid is we keep a list of all the free Arkansas tax prep sites. If you're under 60, you can still go to an AARP site. And if you're over 60, you can still go to a VITA site. So we keep lists to try to send people to the very closest place that we can. A lot of ours do it without appointments, Tom. Some do with appointments, but a lot of them are walk-in, and you just go when they're open. And unfortunately, sometimes there's a line, but it can move very quickly. Lots of the VITA sites are very efficient because they just do hundreds, if not thousands, of tax returns. We get that list prepared in January. You can't go and submit your tax return until January. So contact us in January if you want to find out, or you can call these numbers that are on the screen.
So,
they are painful.
we all don't like to pay taxes. It's less money out of our pocket, but taxes are important to pay, because taxes pay for our national defense. They pay for the Army, they pay for the Marines, they pay the salaries of all those individuals who are defending our country and defending our freedoms. They pay for the roads, the interstates that you drive on. And if you pay state income taxes, they pay for the state roads that you drive on. They pay for the fire and the police, who come to your house and put out the fire, or save, help you with a burglary. They pay for disaster relief, as we've just seen here with the hurricane that just pulled through. I mean, the federal government will come in with FEMA, and they will help those people get their lives back in order. You know, they pay to support businesses through grants to small businesses, and they help create economic opportunities for American businesses overseas and in other markets. So we don't like paying taxes, but we get a lot of services from the government, and your taxes support those services, and those help our country, you know, become better.
So, and if anything, our message today is we want to try to get you, whether it's at your first job or the first day at the job, or maybe later, to pay the correct amount of tax. We don't want, you shouldn't overpay, you shouldn't underpay, you should pay your share based on what Congress has said. And hopefully we've helped you figure this out. If you have any questions, here are our phone numbers, our website. We have a couple of phone numbers at Legal Aid. You can call us, leave a message if we're helping someone else. We will get back to you promptly. We certainly want to hear from you if you have a minor question, and we'll also help you. All of us at the LITCs will help you if you have an actual controversy with the IRS. We want to help you get it solved. We know the IRS can be very frustrating. You can still send questions at any time, even after we close this out. You can call us on the phone, and you also can apply online through our organizations if you'd rather do that in the middle of the night when we're not there. So thank you for participating, and tune in to our next Facebook Live in October, to be determined, but we're here every month. Thank you.
Thank you.